So a lot of my YouTube subscribers have written to me saying that they only want to do positional trading and they only want to do weekly charts. They do not want to take a trade on the daily chart because they do not have time to check the chart. Maybe they are busy in office. Somebody is a commercial airline pilot, does not have access to internet and things like that. So there is a large audience that I have noticed who are only ready for positional trades using the William O'Neill method. So this is my effort to help you in that endeavor. So this is going to be a multi-part video series. Remember, this is only for positional traders. What is the difference between swing and positional? Well, the primary difference is in swing, we do not give much weightage to the fundamentals. We are trying to catch the upward momentum even in fundamentally weak stocks because these stocks are showing maybe good comparative strength, good technical strength. They may not have great fundamental strength, but in a confirmed market uptrend, I have seen stocks with like minus 25% EPS growth and a stock goes up 20% in 2 days. Okay, remember Chennai Petroleum, 15 July 2024. So those are swing trades. In positional trading, you give a lot of weightage to fundamentals, and I will discuss what criteria to look for in this video series. Okay, so this is going to be a multi-part video series. Primary difference is fundamentals. Secondly, the moving averages that you use to manage the trade. In swing trading, the moving average that you track is 21-day exponential moving average. In positional, you are tracking the 50-day simple moving average on the daily chart. Okay, what you see here is the weekly chart, and we will do a weekly chart layout setup in this video. As you can see, this is Eternal, this is Zomato, by the way, they changed the name, and this is old chart data. This is August 2023. So as per regulations, I am only allowed to show you old chart data. So that's the difference between swing and positional. In swing, we give less weightage to fundamentals. In positional, we give more weightage to fundamentals. In swing, our main moving average is 21 exponential. As long as the stock remains above that, we are fine. In positional, the 50-day simple moving average is our main moving average. And on the weekly chart, the 50 SMA translates to 10 week SMA, okay, which you see on this chart. So that's the moving average and the time horizon. The time horizon, the holding period for a swing trade would be 2 to 4 weeks with a target return of double digits. So anything about 10% in 2 to 4 weeks, that's considered a good return for swing traders in one stock. In positional trading, there is no target as such because you're buying a fundamentally strong company showing good technical strength, good liquidity, good comparative strength, good fundamental strength, and that too in a confirmed uptrend. Why would you sell that stock? Okay, so there is no specific target. However, when the stock breaks out of a proper buy point, generally it starts forming the next base after 20-25% distance from the buy point. So that would be a place to lighten up on your position, and pyramiding could be done. Okay, so the time horizon also differs between swing and positional. Okay, and the target return also differs. This is the first part of the video series I am making for people who only want to do positional stock trading, William O'Neill's style. Okay, so I personally have studied William O'Neill in extensive detail. Okay, both online and his book. I must have read the book more than 3 times at least. So I have done extensive study of what William O'Neill and his philosophy is. I have also studied in detail Mark Minervini and the trades he took as a US investing champion. So this is a video where we will just do the chart layout. Okay, so this is part 1. We'll see what to do in part 2. This is going to be a multi-part video series. So first things first, please understand that William O'Neill used bar charts. He did not use candle charts. Okay, why is that so? Why to use bar chart on a weekly time frame? because in a weekly time frame, the opening price is not very relevant. Okay, in a daily time frame, the opening price matters, or the fluctuation, the noise matters, because you could have rising window, falling window, things like that. But in a weekly chart, the likelihood of a falling window, rising window is very less. If you look at this chart of Zomato, you hardly see any window here. Maybe here there is a window, but weekly chart smoothens out the noise in the daily. So we will first convert this to a bar chart. Okay, go here. I click here, click on the bar. Make sure you click HLC bar. This is high low close bar. Make sure you click color bar based on previous close. Okay, because green color means the closing in that week was higher than the closing of previous week. Red color means the closing in that week was lower than the closing of the previous week. Very simple. Don't click thin bars here. We want thick bars. Okay. That's it. These are the only two things we need. And go here, make it a bar chart. So you have high, low, and close. You don't have the opening price. That dash is nothing but the low. Sorry, the close. Then you click this. This is the moving average, labels on price scale, values in status line, input. This is a 10-week simple moving average, which is consistent with what William O'Neill was using. And since this is a weekly chart, the range of the prices could be very large. That is why you use a logarithmic chart. Okay. So you go here and yeah, this is logarithmic chart. So you have to click A here. Okay. Sorry, you have to click L here. This is a logarithmic chart. Now, don't ask me what is the difference between arithmetic and logarithmic. In simple terms, if I have to explain to you, in logarithmic, the distance between any 2 points, if it is kept constant, the percentage does not change. So, for example, like from here to here, this is like 14%, right? If I move this here, it will remain 14%. Okay, so if the height is kept constant, the percentage remains constant. Well, that doesn't happen with regular charts. Okay, if I use this, let's say this is, how much is that? 23%. Now, as I move this higher, this percentage becomes lower and lower. Why? Because say if a stock goes from 500 rupees to 100 rupees, that's a 100% return, right? 500, sorry, if a stock goes from 500 rupees to 1000 rupees, that's a 100% return. But if it goes up another 1000 rupees, that's a 50% return. That is not a 100% return from that level. Okay. So that problem is solved by logarithmic charts. And this is consistent with what William O'Neill was doing. So we are discussing what William O'Neill was doing. Okay. I am primarily a daily chart trader. Occasionally I would take a trade on the weekly, but majority of my trades are on the daily because I follow Mark Minervini. But since I have studied O'Neill and I know the difference between buy point and the pivot point, uh, I can discuss with you because it's like any chart, any stock that is forming a weekly base, obviously it is going to form a base on the daily time frame chart, just that there will be a lot of noise. But positional traders, please pay attention to what we are discussing here. So first, bar chart, then the color of the bars matters. Okay, red is a down bar, green is an up bar. It is depending on the closing of the previous day. Okay, moving average is a 10-week simple moving average. Then we go to volume. Okay, now volume, change this to uh, histogram. Yeah, change this to histogram and you click here, select the thickness, select the highest. Again for red, select the thickness as the highest. Okay, and volume moving average, click here, make it line. Okay, select the second level of thickness. Similarly for this also, you have to select the second level of thickness. Okay, coming to volume, and this is 10-week moving average, and you have to make it color based on previous close. So what we are doing is we are trying to match the color of the price bar and the volume bar, which is exactly what you see with William O'Neill charts and you see on the Market Smith platform. So it is exactly the same. Okay. So keep this color combination, make it green, red on both volume and price. Keep this kind of thickness level so that it is very clear and keep two moving averages. That's it. You don't need a third and a fourth moving average. Okay. You don't need the 30 week or the 40 week. This is what it is. This is more than enough. Okay. This is the chart layout. And then based on what you see on Market Smith, they give you the pivot point. So let's say this is, I think this was base number two. Okay. Base two or base three. And the high of this candle is 102.85. So 102.85 was the pivot point, the buy point identified by Market Smith platform. Okay. That's the pivot point 102.85. And once the stock breaks that would be a positional trade. Now, I am not discussing fundamentals of the company here. I just wanted to show you the chart layout. How do you set up the chart? Because once you set it up, you put a, see, I have made two layouts, daily and weekly. In this week, see, daily is a candlestick chart. Weekly, we will keep bar chart. Let us keep it simple, not complicated. Okay, because I know you don't have time, you're busy in office, and the buying range in this chart is going to be a much higher, bigger buying range than what we see on the daily time frame chart, because in the daily there is noise, there is risk. In a weekly time frame, there is 5% distance between the first yellow line and the second yellow line. That's the buying range as per William O'Neill. Okay, if it is more than 5%, it is extended. Well, anyways, that we will discuss later. But if I move this price forward, see, it goes daily, right? This is a weekly chart. So one click does not mean one candle. One click means one day, right? So I have to click multiple times here. You see from the base, it breaks out, continues to go up. Okay. How to keep stop loss, where what is the buying range, what is the selling range. We will discuss all of that. But I wanted you to focus today on the chart layout. I am not even discussing the base. Remember my base counting video? We look for three bars where the high of the three bars is below the high of this bar. By the way, this is the 52-week high. This is August 2023. Then you have August 2022 somewhere here. So that's the 52-week high. So the stock is within 25% of 52-week high. Okay. See, those basic rules don't change, and we will discuss that later. But I want your chart layout to look like this. Once it looks properly like this, don't change the color combination so that your understanding is consistent with me. We are on the same page. Some people use blue, green, red. Some people use some people use green, blue, red. It is their own style of, looking at moving averages. But please be consistent with whatever I am teaching. Make sure your chart looks like this. You will have to rewind the video to check the settings that I have mentioned here. Pause the video, make sure it looks exactly like this. Some of my YouTube subscribers have spoken about white screen. The reason why I don't put white screen is because if I'm going to be trading for the next 40, 50 years of my life, then I want to protect my eyes. This is what Patrick Walker taught me. You have to have a black screen. It is good for the eyes. Okay. That because daily we are looking at hundreds and hundreds of charts, correct? So protect your health, protect your eyes. This is all an asset. We have to make sure we are healthy so that we can trade for a long period of time in our life. So black chart layout and very visible thick bars. Remember, why are we using logarithmic? Because the range of prices is very large. We want to capture all of the data in one screen. And that's it. That is what I wanted to discuss in this video. Just wanted to show you how your weekly chart should look like. We are using bar chart, not candle chart, because the opening price really doesn't matter on a weekly chart. The range of price is very large. You would not normally see rising window, falling window, on a weekly chart. Okay, it's generally it is clean. So this is part one, the weekly chart layout for positional stock traders only, who only want to look at who only want to trade weekly charts, who don't have time to look at the dailies. Okay, let's see what to discuss in part 2. I have not decided that yet. The purpose of this video is to only make sure you get the layout correct, and which the layout should be consistent with what William O'Neill is using, because you will have to check market smith on a daily basis. So this should look like what William O'Neill's chart is looking like. And conceptually, whatever color you choose to use in your layout, conceptually you should understand what is going on here. Here also, don't click on logarithmic here. Just click A. Let it look like this. This looks decent. Okay. Here you need logarithmic. Okay. Take care.